There we go. Alright, so disclaimer, like always, you guys have seen this a billion times. Basically, all of this is just opinion and for informational purposes only. If you lose money, don't blame it on us. And yeah, it's pretty straightforward. There we go. Okay, Matthew, if you'd like to explain this, and I will get this running. Okay, so for our icebreaker today, we will be doing a short quizzes. Please log on to thequizzes.com/join and wait for the code.
I don't have Wi-Fi.
Shut up.
You could have just like kept that to yourself.
And that's where we lost another member.
I'm good. I don't like that.
Okay, hi, please have oh, can I have a chicken? No, please. Oh, wait,
Well,
Please hold. Andy is diligently working to get this code. Everybody, please join the link up there. Yeah, so everybody use your phone, Chromebook, whatever. This is just a short 10-question quiz thing, and yeah. The code. Okay. You ready? I'm holding. Alright, code is 636 4169. Once again, 636 4169. And I think we might have around like 15 people, so I kind of want to see around that number if possible. And once again, this is just a short little quiz saying that Fuad found that should be pretty interesting. If you can't read it, once again, 636 4169. Okay, does anyone else need to join it? Are you in? You're not in? Do you need help? Do you need assistance? What's up? Just join it, trust. It's a good idea. Alright, we have 13. I think you guys should be able to join even after I started. So let's go and start. I think, yeah. And I don't know if this is going to show up the questions for me. Yeah, it is. Okay, so you guys have fun with that. I'm going to be doing it as well, so, you know.
How do I click? Oh, there we go.
Bro, wow. No, I didn't get any. What do you mean?
The question was someone got wrong.
Oh yeah, just power up too, which is kind of cool. Nice. No, it's not me. Wait. I think accuracy is probably more important. But...
Ethan, what's your score?
Say what?
Zero.
Alright, so I'm also done. Oh yeah, we gotta see the spicy leaderboard.
Can you scroll down? Who is the top?
All the way down, please. All the way down.
I want to see my glory.
Okay, we'll give you guys maybe a couple more minutes. Let's go down. Let's see. Good job, Ethan. I don't know. What happened, Alan? Come on, bro. Alright. And looks like most people are finished up. Yeah, some rough scores, but some also pretty spicy scores too. Alright, cool. Yeah, so that was our icebreaker. Oh, nice. Oh, I have to click it. Okay, I don't have to click it. Where is the top? I don't know. Nice. Okay. Thanks everyone for playing our icebreaker. Hopefully you guys enjoyed that. Just trying something new for the icebreakers. So, yeah. And if you guys liked it, we might do some more in the future meetings. So yeah, alright, cool. Next, yeah.
Right, so this is the standard spreadsheet check. You can visit the QR code to see if we correctly marked down your attendance. We'll give you about like a minute to do this.
Yep, and thanks for chatting. Yeah. And this is all updated by Charlie, so you can all thank him for getting your attendance records fixed and nice. And yeah, I really do recommend you guys to check this just because you want to make sure that all your attendance records are correct. Are there any issues? If not, then we can move on. Yeah. Okay, cool. Next. There we go. Alright, I don't know whose slide this is, so.
Josh.
Oh, is it you? Okay, yeah, it is. Yeah. This is on the slide.
Okay, so for the main takeaways from last meeting, we saw that the market is still continuing to decline because of like the new variant of COVID, and mutual funds utilize investors' money through securities, and we also learned what FAANG stands for, which is Facebook, Amazon, Apple, Netflix, and Google. And then we learned that the metaverse could potentially be the new internet in the coming decades. And we learned that bonds are essentially loans that are given out to borrowers to invest with a maturity date and an interest to be paid. And we also learned that bonds are generally lower risk, but you also receive like a lower reward. And companies go public and list stocks in order to round up funds.
Alright, thank you, Josh. Yeah, so those are the main takeaways if you guys weren't here. And yeah, we'll move on. Okay, agenda.
Alright, so for our agenda today, we're going to be learning about learning about the update for the market. And then for the second slide, we're going to learn about preferred or common stocks. Number 3 is semiconductor shortage deep dive. And number 4 is specific stock dive from Tesla and paper trading.
Alright, yeah. So some mistakes on the actually we won't be talking about preferred stocks, and instead Tesla will be talking about Spotify. But other than that, it's all correct. Alright. So first off, market update. So as you can see, not too hot right now. Nasdaq, S&P 500, Dow Jones, all those three indexes today were all in the red. And as you can see from the sectors, you can see there are actually more sectors that are losing money versus gaining money, which is not a great sign. And that is probably very different versus maybe a month ago or 2 months ago. And I'm sure most of you guys know why, probably all of you. Say it on one, let's see if this works. 3, 2, 1. Watch.
Interest rates.
Yes, yeah, both. Yeah, exactly. Yeah. Yeah, you guys got it. So yeah, that's the main market update. Nothing, just still, it's not doing too great, but yeah. And moving on, terms.
Alright, ESG stands for environmental, social, and governance. So investors use three non-financial factors to find growth and risk in order to invest in the right stocks and find the right opportunities.
Thank you so much. And I'll be I guess, like elaborating more on that. So yeah, essentially ESG is just a way for people to kind of analyze companies completely like non-financially. So it essentially kind of calculates how a company is in terms of the environment and its social impact and its, I guess, political impact. And to that, because this factor is very important for a lot of investors that really do care about the companies and what they are doing to our world. So generally, if they have a bad ESG score, they're generally pretty controversial. And well, if they have a good ESG score, they're probably doing something good for the world. So yeah. For example, let's say Chevron, one of the gas companies, actually has one of the worst ESG scores just because it's very controversial and gas and everything pollution. So that's just one example, and you guys can probably find pretty much every big company has a rating for ESG. So if you guys want to check that out, it's pretty interesting. So yeah, it's just another way for investors to kind of just picture what the company does in the real world. Next is beta value.
Okay, so beta is a measure of a stock's volatility in relation to the overall market. By definition, the market, such as the S&P 500 index, has a beta of 1.0, and individual stocks are ranked according to how much they deviate from the market. Definition from Investopedia.
Yeah, thank you, Katie. Yeah, so once again, elaborating on that, essentially the beta value is a value from around 1 usually, and 1.0 is for the S&P 500, which is generally how a market is doing during like a period of time. Individual stocks, however, have very different beta values. For example, a stock that might fluctuate, like one of maybe a penny stock, probably has an extremely high beta value. Now, if a stock is generally more like it doesn't really have a lot of high peaks, but it doesn't have a lot of low lows either, probably has a lower than 1 beta value, like 0.8, 0.9, all of those. So that just means it's just another way, once again, similar to ESG, just to kind of test what your stock is going, like how it is going to perform based on S&P 500. And yeah, it's just a very, very interesting value that could also be potentially used in your decisions for trading. And I clicked off. Okay, annual report.
Okay, annual report, which is our last term, is a company's yearly report to shareholders documenting its activities, finances in the previous financial year. And this definition is from Oxford Language.
Thank you, Joy. And yeah, so annual report is just a annual report for a company, and it generally is very like highly valued when you're looking at the company into their specifics and what they're doing as a company financially. So yeah, that is an annual report. That is the end to our terms. So next we're talking about the semiconductor shortage. Now I talked about this, I've mentioned it briefly at past couple meetings from like, yeah, I mentioned it, but I haven't really dug really deep into it, and that's what we're gonna do now. If I can click it correctly. Okay, you want me? Okay, yeah, I'll do this slide. So, why is this important? Why should everyone care about this semiconductor shortage? Well, most of the important technology products are all made from semiconductors. What does that mean? Well, it essentially means if you don't have semiconductors, you don't have a lot of the technology we have in your computers, in your phones, and cars even. So it's extremely, extremely important, extremely vital. And semiconductor chips, according to many experts, are actually, the shortage is still gonna last well into 2023, which is still like a year away. So this is like a huge issue that is still going to be around within the next couple years. So it's pretty important to understand why it's happening and yeah, and why, yeah. Okay, Alan.
Yeah. Really? You want it? Yeah. Okay. Why is there a chip shortage? Well, there's many reasons why. First, following the 2000 tech bubble burst, most equipment manufacturers hold little to no chips in their inventory. One of the main reasons why is the dramatic growth in tech demand. Many modern day appliances use these semiconductor chips, such as cars, computers, smartphones, mobile internet, and even washing machines. Demand has persisted throughout the pandemic, and weather disasters have led to issues with manufacturing facilities around the world. At the start of the pandemic, car companies canceled their semiconductor orders only to receive a persistent demand for cars. Overall, as the world moves further and further towards technology, demand for semiconductors increases. And the final factor is the US-China trade war, which is a really complicated subject that we could probably talk about in another meeting.
Yeah, so just to add a little bit more on what Alan was saying. So specifically about the, I guess like the persistent demand. So I'm sure some of you guys are like computer nerds, yeah? I'm pretty sure you guys know about all the stuff about the GPUs and everything. And why is that? Semiconductor shortage. That's why. Yeah. So a lot of this is really, although it seems kind of like, oh, it's just technology, it's whatever, you know, it actually is extremely vital and it's pretty important to understand.
Okay, so what does the shortage mean for investors? Well, first of all, Taiwan's Semiconductor, ticker symbol TSM, is the leading global manufacturer of semiconductors. And in 2020, they announced $30 billion in spending, which is a 77 increase from, or sorry, they announced that in 2021, which is a 77% increase from spending in 2020. And on top of that, they announced another $100 billion in total spending over a course of 3 years, which would aim to further expand capacity and manufacturing plants. However, large amounts of spending could be risky for the company's financials. Due to the shortage, companies' time windows for placing orders and chips have greatly expanded, putting up to 1 year's worth of non-cancelable orders. So basically what this does is, since the orders are stretched out so far, it gives a higher visibility for revenue and earnings. So basically the visibility for revenue and earnings just becomes much clearer, and what this will do is it could be a catalyst for future valuation of semiconductor companies. However, it's a good thing because the semiconductor industry is highly profitable.
Thank you, Alan. Not really much to add on that. Yeah, and we move on. Okay, yeah, so that was all about the deep dive onto the global shortage of semiconductors. And now we move on to Spotify, specific stock dive. And
Okay, so this is a specific deep dive on Spotify technology. Just a quick note, Spotify does their accounting in euros because their headquarters is at Stockholm, Sweden, and 1 euro is approximately 1.13 USD. So starting off with Spotify's key info, as of late, their market cap is $37 billion. The price of Spotify stock at Monday's last market close was approximately $193, which is about a negative 1% change. Their cash to debt is approximately 4.3 billion euros to 1.175 billion euros in debt. Their revenue has seen steady growth for 2019, 2020, and TTM. TTM basically means trailing 12 months. So for basically just looking at the numbers, you can see that their revenue has had a steady increase from approximately 6.7 billion to 7.8 billion and then 9.1 billion in euros. Their earnings have been pretty spotty, but we'll get into that further in the business model because of royalty payments, but pretty much they have seen a slight improvement in earnings, yet they're still negative. And whenever you see parentheses around the earnings like that, that indicates a negative value. So right now they're about at negative $120 million in earnings, or sorry, euros.
Yeah, and just to kind of quickly define like what market cap is, essentially it's all of the outstanding shares combined together, which essentially means all the shares that I guess traders have bought. So if you add all of that value together, you get 37 billion. And generally, yeah, so that's essentially what market cap is. Alright, and now I'm going to be talking about the pros of Spotify's business model. So, from 2015 to 2019, the global recorded music industry grew about 45% to $20 billion. Now, you can obviously see how this could be a huge, I guess, potential for Spotify as they are a music streaming service. And they've capitalized off of this rising popularity, especially through podcasts. And they've been signing podcasts as Spotify exclusives / originals, including the Joe Rogan Experience and other notable podcasts. They generate revenue from ad-promoted revenue, which can then funnel users into premium subscriptions, which also account for the majority of their profits. Gaining popularity around the world, MAUs, or monthly active users, have grown a compounded annual growth rate of 25% from 2018 to the past year, which is TTM. And this is 200 million to 381 million. While premium subscriptions has grown at a CAGR of 24%, which is 96 million to 172 million. That is, as you can see, a lot of steady growth, especially capitalizing off of the popularity of music.
So pros continued. Spotify has to pay royalties to music artists, makes it difficult to grow profits faster than revenue. So the reason why this is actually a pro is because as Spotify's popularity increases and they gain users, therefore they can have more leverage in bargaining for better royalty deals with like music labels. Podcasts do not require any form of royalty payments, which is obviously a pro. And as a result, scaling podcast listeners would drastically improve their profit margins. In 2020, Spotify made acquisitions of Ringer and Megaphone, which shows that they're focusing on the non-music portion of the business model. A really good pro is that Spotify is founder-led by a strong CEO. Usually companies that are led by a founder tend to do better and their management succeeds more. He also holds large stock positions, which is also a good thing because it shows that the CEO has confidence and he's essentially not bailing out on his own company. Spotify has been cash flow positive for multiple consecutive years, and in 9 months the company's trailing operating profits have turned from a loss of 293 million euros to an operating profit of 52 million euros. And essentially, to really dumb it down, cash flow positive means that there's more money, like the company is receiving more money than is flowing out of the company. Why consider buying now? Simply put, Spotify shares are down 40% from their all-time highs. However, the market is extremely volatile at the moment, so caution is advised. Yeah, so cons and risks to finish off the deep dive. One of the most obvious risks to Spotify's business model is tough competition with other music streaming services, most notable of which is Apple Music. Spotify needs to carefully establish royalty terms with labels. If they fail to do this, then companies like Apple Music could seize the opportunities to secure better deals, and Spotify could be left out. Investors in Spotify should be wary of management spending, as exclusive content such as podcasts can be expensive to secure deals with. A large part of the business model to grow operating profit is reliant upon a growing interest in podcasts. However, if podcast growth staggers, so could future profits. And yeah, those are our sources.
All right, thank you, Alan, for leading us in today's specific stock dive into Spotify. And now we are moving on to paper trading / conclusion. And yeah, so now we will do some paper trading. And I will log into our. So just give me a second while I log in.
It's my stock's really boring. That was a good game. Technically, yes. Technically, kind of. And you might have been like going on.
I've never attended a single study session.
The buddy?
Study session. Wow. Basically, you have to show the results that you're supposed to transfer to the class. I've never shown that.
Technically.
Do they tell you
Alrighty, so let's take a look at our portfolio, shall we?
Let's wait a little bit.
Yeah. So we're currently losing, basically all of our stock picks are losing money right now. And any specific stocks that jump out to you guys?
I can't see.
Spotify. Do we buy any Spotify? No. Oh, we should buy some Spotify. Okay, we'll talk about that later, but okay, let's see. Which stock are we losing the most? Oh, okay, well, did we not have some Bitcoin? I thought we did. Wait, hold on. Let's see. What's the options? Okay, never mind then. Alright, yeah, so all of us currently losing a bunch of money here, but let's go over some, shall we? So AMD, we paid it for 139 or 140 pretty much, and right now it is at 111. Would anyone want to guess why it is currently dropping so hard? Sure.
Is that semiconductor shortage?
I think that definitely plays a part. I haven't really done that deep into AMD, but I'm pretty sure that's definitely one of the issues. And obviously, all of these companies are affected by the COVID and all of the stuff that's happening in our government right now, which definitely doesn't help with buyer confidence. And let's see, yeah, Tesla has actually dropped. We actually made money, I think, 2 weeks ago from Tesla, but now it has dropped to the 900s again. And let's see, Nvidia's, we've actually lost about $1,500 in Nvidia, and we bought it at $320, and now it is at $220. So that is a $100 drop, around $90 drop. So that's also just shows you how quickly all this can just crumble and why we're doing this in the paper trading, so we didn't actually lose $20,000 of real money. But yeah, so but this is also something to be aware about. Now, although right now we are in a bear market, what does that mean? We talked about that in our Spotify deep dive. Essentially what it means is that these prices are going to be as low as it's going to be probably within like the next couple of years. So like this is pretty this might be a great opportunity for buyers to just start investing. So, with that said, let's buy some stocks, right? So, we have a good amount of buying power actually, so. Alright, any stocks, any recommendations that we should buy? Please also add the reasoning behind it. So, Alan. And why is that?
It makes sense to do so.
Sure, okay, good answer. Spotify. And I'll probably buy around, I think that's it? Yeah. Okay, and I think we'll buy around like 15. That should be around like 3,000. Yeah. Okay, cool, done. Any other stocks? Recommendations? Anyone? Okay, yeah. Say that again, Austin?
I don't think it's a good time to buy right now.
Okay, why not?
Yeah, but why not?
I think there's like going to be announcements from the Fed that interest rates are gonna be higher and inflation's gonna come down.
Yeah, exactly. So, yeah, so with basically any major announcement, like what Austin just said with the government, it can have a huge impact on the market, and generally, it's not a good thing. So, all of that, just like some of my own thoughts. Right now, I would personally not buy much at all. Also because I don't think this thing is gonna go away anytime soon. I'm talking about COVID. So, we still don't know when the market's gonna drop to its lowest. So it's probably not a smart idea to buy while it's going on the down. So, yeah. If we don't have any stock picks, I think that's a wrap for our paper trading, and we'll move on. Still got a couple more slides to go, but we're very close to finishing. Alright, post and reflections, I think, so yeah, you guys got it? Alright, great. So, once again, please rate it from 1 to 10, but guys, please add a note, okay? Please add some criticism that I could have improved or that we could improve. And don't put your name on it, obviously. And once you're done with that, these are our contact info. Please check out our YouTube. Okay, I'm going to be updating a lot of the stuff that our officers have been quietly working at, and all of that, along with the sign-in link. Thank you guys for all coming. Our next meeting will take place on Tuesday, February 8th.